And the number 9 is a business purchased a motor vehicle $8,900 on credit from AKS Limited. The bookkeeper made an error of reversal when recording this purchase. What was the incorrect debit entry he made? The actual entry was, the correct entry will be of this transaction motor vehicle to AKS Limited, but he made the reverse entry. The reverse entry will be AKS Limited debit to motor vehicle credit. So A option will be correct, in which AKS Limited will be debit 8,900. And number 10 is Ali's financial year ends 31st March. During the year ended 31st March 2019, Ali paid wages of $42,500 on 31st March 2019's 1,400 wages were accrued. Which annual entry record the transfer from the wages account to the income statement on 31st March 2019? And the B option is correct. Income statement 43,900 to wages 43,900, because 1,400 accrued wages will be added in the paid wages 42,500 plus 1,400, that will be 43,900, because accrued wages it will yet unpaid, but it is the expense of the particular year, and this will be included in the wages, and accrued wages will be a liability, and income and expense are added. Income and expense are recorded in that particular year in which they are earned or incurred. So these expenses has incurred in this particular year, and this will be transferred to the income statement in this particular year. So unless we will paid it in the next year, but these are recorded in this year, current year. And the number 11 is on 1st March 2019, a trader paid rent of $1,200 covering the period 1st March 2019 to 31st May 2019. The trader's financial year ends on 31st March 2019. It means we will take the expense of 1 year only, because this is from 1st March to 31st March, and remaining 2 months April and May will be prepaid expense, rent expense. What balance was brought down on the rent payable account on 1st March 2019? And we will see in the first we will see the which option is correct. $800 will be debit is correct. D option will be correct. How we will see in the rent expense account in the working. On 1st March 2019 he paid $1,200 as a rent expense, and on 31st March 2019 year end was 31st March 2019. So we will only 1 month as a rent expense, charge as a rent expense. Remaining will be of prepaid rent expense, and only 400, because when we will divide 1,200 1,200 divided by 3 on 3 months, that will be 400 per year, and 400 will be transferred to the income statement as a expense, closed in the income statement 400, and remaining 2 months 400 plus 400 will be prepaid expense, that will be his asset. So it will be his prepaid his this will be his current asset. It will be utilized in the next year. And an amount owed by Bloch was written off. Which entries were made? Account to be debited and account to be credited. We will make the journal entry of bad debts because debit, and Bloch will be credit. Because bad debts are expense, it will be debit, and Bloch will be credited because before this it was account receivable, it was asset. Now it will be write off, so it will be credited, and bad debts will be debited because these are expenses. K1 depreciated his motor vehicle by $2,000 at the end of the financial year. Which journal entry would record this? And first, income statement to provision for depreciation of motor vehicle 2000, because provision for depreciation is closed in the income statement at the year end. And Ravi's financial year ends on 30th April. Ravi bought a motor vehicle for 8,000 on 1st May 2016 and sold it for 4050 on 1st May 2018. He uses the diminishing reducing balance method depreciation at 20% per annum. What would be recorded in the income statement for the year ended 30th April 2019 for the disposal of the motor vehicle? And C option will be correct, that is 1070 will be loss. How we will see in the next slide. This is the working of this account. Disposal of motor vehicle account is, and when we will dispose of motor vehicle, the disposal account to motor vehicle, disposal of asset to motor vehicle, and disposal of disposal account will be debit and motor vehicle will be credit. So it will be recorded on the debit side 8,000, and we will take the accumulated depreciation of all years. We will take the depreciation of first year, that is 2017. At the end of the first year, that is 30th April 2017, accumulated depreciation 8,000 multiplied by 20%, that is 1600. And of depreciation of the second year, that is on 30th April 2018, accumulated depreciation, because this is reducing balance method, we will take the depreciation on the net book value 8,000 less previous year's depreciation. This will be the net book value of this asset will be after 1 year 6,400 multiplied 20%, this will be 1280, and the asset was sold on 1st May 2018 by $40-50 via bank to this disposal of motor vehicle, and 40-50. And when we will see when we will calculate, add both these debit and credit entries, and credit entries are less, so we will take the debit balance on the credit side 1070, that will be transferred to the income statement as a loss, because when income statement will be debit, it will be loss or expense. So here is a loss, and it will be transferred to the income statement in the profit and loss section of the income statement. and which would not appear in a sales ledger control account. And D option is correct, provision for doubtful debts. All these options will be included in the sales ledger control accounts. Bad debts, write off, cash discounts allowed, customers check dishonored, and D will not recorded in the sales ledger control account. And number 16 is Fatima opened a departmental store on 1st January 2018. She provided the following information on 31st December 2018. These are the department X and Y. Revenue of X is 1 lakh and Y is 60,000. Sales turn of X is 14,000 and of Y is 8,000. And purchases of X is 80,000 and Y is 40,000. Carriage outwards not for X and for Y is 1,000, and carriage inwards for X is 5,000 and not for Y. At 31st December 2018, inventory was valued at 16,000, of which 75% related to the department X. What was the gross profit of department Y? So B option will be correct, 16,000. So we will see also this 75%, that is closing inventory. 16,000 is the total closing inventory, of which 75% of X. When we will take the 75% of 16,000, this will be 12,000. It means the closing inventory of X is 12,000 and remaining is of Y department, and Y department is 4,000. How the total working of this account we will see in the next slide. And revenue of Y means sales 60,000 and less sales turn, that is 8,000, and remaining revenue is 52,000 less cost of sales. Cost of sales is equal to purchases. There is not opening inventory, so we will take purchases less closing inventory. How we will calculate closing inventory? Because if 75% of 16,000 is related to X department, so 25% will be related to Y. So 16,000, 25% of 16,000 will be 4,000. So we will deduct 4,000 from purchases. It will be 36,000, that is cost of sales, and sales less cost of sales will be equal to gross profit, that is a gross profit of Y, 16,000. That was the correct option.